Hey everyone, this is my weekend video. Real quick, some things I'm looking at this week. Here's some of your top earnings coming out this week. So, and we have a whole slew of economic data coming out this week on top of everything else. So, all kinds of things, mega tech companies hitting the tape here. You got Apple, you got Amazon, you got Microsoft too, I think, in here. Microsoft, Google, all your high flyers are hitting this week. You got Boeing in here, ExxonMobil, Chevron. I mean, all these things are looking, all kinds of data hitting the tape here on this. Okay. As far as our economic data goes, it is just screen after screen here. You guys can use investing.com. I'm not going into any details on this stuff. We have some massive GDP number out of Europe and US. But my main takeaway and what I'm worried about this week, we're going to start seeing Europe coming down, breaking supports this week. So if you come over here, we're still above supports here on the German DAX and a lot of these indices, the CAC 40 and the FTSE. Most of these are still holding above critical supports. So that is one theme that I'm looking at this week, that we come down here and we start breaking some of these supports. See, we're below our moving average, start trending back lower here on some of these indices. FTSE, that is FTSE 100. There it is. Uh, this is England here. So England's been doing really well because of the strength in the energy market. The FTSE is heavily weighted in energy. So this will probably be the last one, in my opinion, to come down. But, that's a theme that I'm going to put out there, that some of these European-based indices are going to lead to the downside this week. Another theme I'm putting out there, uh, uh, Dixie, DXY. I am actually looking for some profit taking here in the Dixie this week. So I know that's a bold call. So two themes theme I'm really looking for here is some early sell side action in the markets. Don't know how far it's going to go. And so I'm actually looking for early weakness in the week here in the markets, and a bit up in the bond yields. No, a bit up in the bonds, not the yields. The yields are going to come down earlier this week, in my opinion. I'm not expecting a huge move to the downside, but we have entered the blackout period on the Federal Reserves, so they're not going to be sitting there stirring the pot on yields for the next couple of weeks, waiting for the March or waiting for the May final announcement. I think they pretty much say 50 basis points for the next meeting. They've got everybody primed up for it. Everybody knows that's going to happen. And basically, we're going to go to 2.5% higher. We're at a quarter basis point right now. They're pretty much getting us all primed. We're going up to 2.75 yet this year. So that's a pretty good indication. And the markets, especially tech, that drives down higher interest rates, drives down your existing price to earnings multiples. So remember that. That's what happened when you've had that higher interest rate coefficient. Then that drive, that all of a sudden, uh, the prices have to come down to adjust for that higher multiple. So just keep that in mind going forward. Some things I'm looking at real quick here. I do want to point this out. This is my TikTok guy on Twitter. He follows Apple, Amazon, uh, Tesla, Google, and Microsoft. He thinks those are the five most important companies to the market because they went up. Basically, those stocks are responsible for all the gains over the past year here in the Nasdaq. So another thing I want to got going on here, you see your MAs here. So I've got the uh, 20, 50, and 200 SMA using my center of gravity study. And so bottom line is, this looks like a bear flag to me, with a really nice squeeze going on with your MAs. Potentially breakdown pattern set up here. And my main takeaway that I want to go into the first of the week, we are potentially going to start Monday with a death cross. We're going to start doing a death cross on your megatechs to start the week. I know most of those earnings Tuesday, a bunch of those earnings are going to come out, and then Thursday, a bunch of those earnings are coming out. But we do have a potential death cross with a squeeze scenario going on with these megatechs, in it with a bearish um, signal potentially here on these mega caps. So I do want to keep that idea floating in the back of your heads for you guys who are really bullish in this market. So we do have a clear head and shoulders pattern, okay, on our S&P, so just remember that here. And we broke that neckline there Friday. I mean, they just completely just kept it going down, 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 yeah, in Friday's session there. So just keep that in mind going forward. Let's go over here and check on our futures. And our futures this morning, or this evening, we are down on our futures, on our major futures here. So just keep that in mind. It's 8:39 p.m. on a Sunday night, suggesting lower. I do think we're going to see an early move down to the 415. That's your market maker move low. I don't think until we start seeing some of the big boys like Tuesday. We're going into Tuesday with Google and Microsoft. Until those numbers actually hit the tape, I don't think you're going to break out of the market maker move low to in a big way to the downside until some of those numbers. But I do think there's a high probability we're going to come all the way down to that tomorrow. So just heads up on that. You know, uh, Maybe they're trying to get everybody short, so they can put a relief rally as these big numbers come out. I don't know. It's really starting to look iffy in this market that they're going to hold these levels. Like I said, depending on how you draw this, the neckline could be down here because they held this down here before. So that could be by definition, our neckline could be down here at the 415 area, not exactly, uh, you know, where it's currently at. And if that's the case, then that would put us, this is more of the pattern we got going on here. Okay. So, so just keep this in mind here that the monthly 20 SMA is actually lining up with possibly that could be the neckline right there, the actual neckline for the head and shoulders. Okay, and a breakdown of the 215. That can get really ugly real quick because that projects from 480 uh, 65 points lower. So that would put us at 350. That put us all the way down to 350. Okay, guys. And like I said, going into the midterm elections, I was actually looking for 340 going into the midterm elections, which, hey, it could happen a lot sooner than that. But I'm pretty much election day. This is our election day level. So we've pretty much been a solid upward trajectory since election day. And so that's what I'm thinking we're going to back test. So heads up on that. I think everything that has the markets have gained since Biden's got in at or before the midterm elections, all that's going to be gone. So that's my thesis, and I'm sticking to it. Okay, another one I want to look at here is your Qs. I think it's going to come crashing down faster. Okay, we broke critical support there Friday. So this thing, it wouldn't take much at all to be coming crashing down here into some critical support. We do have a monthly support area we could be testing here. It's January, February, March 2021 support area on a monthly time frame. That's where they got the market maker move already. So bottom line is I am thinking with what the pattern we got going on here that they may be targeting this weekly 200-day moving 200-day moving average for the downside potentially, and then that would pretty much wipe out the post-election run-up here in the Nasdaq. So just keep that in mind. They're really close here to the same areas. Okay, so I do want to float that idea. 200-day weekly on the Qs. IWM is leading to the downside. I'm actually thinking we might actually finally get my target early on this week with what I'm seeing in some of these charts. We might be coming down here to there's a quarter pivot down here around 180. So I'm looking at possibly 180 there as a potential target for this week. So keep that one in watch. And if I go over here to my moving averages, some reason it did not save my, or I might have forgot to do it. Let's go to Russell. Ready? I know I did this one. So these are the expected moves for the week here. We do have a 200 a weekly 200 down here. So that would put us 1770 here on the ready. So bottom line is, if you do a measured move, uh, well, you'd have to do 3 times the expected move to get down into that area. And with the kind of numbers we got coming out this week, it's not impossible. So with how important these economic numbers are. So I do want to float that idea also in my video. So some quick charts that I'm looking at here, and I'm going to finish my video off with this so it's not too long. We did just recently get a death cross on our Ford. We just recently got a death cross on our Bank of America. Seems like we're breaking down here, possibly coming down all the way down to 35.65. Micron looks like it's getting ready for a death cross. See how our green line is about coming into that. So this week it looks like we might be getting a death cross, and we're below SAR support, possibly getting a death cross set scenario here for Micron. Macy's looks like it might be wound up here for a death cross, possibly here in a not so distant future, that might be actually seeing a breakdown pattern for Macy as well. This is really important. KRE, that's your regional banks. We're coming this first part of this week. We are coming into a potential death cross on the green line versus the yellow line. That's your 50 crossing the 200 on that one. Casinos are all going to be getting hit from China being shut down and everything. But yeah, these things have been acting very. Plus, not only that, you got a lot of Russian oligarchs help support the China casino industry. So remember that, guys. So basically the problems in Asia are likely. This is one of the possibly high hit areas with everything going on in Asia. So keep that in mind. So we did get a death cross on that one. Deutsche Bank, that's a worrisome. Anytime you get a death cross in one of the biggest banks in Europe, that is another one we have to keep on watch here. IBM. Okay, that's I don't know why that one's coming up. So GLW. Corning just recently got a death cross. Caterpillar was actually getting a golden cross. So we actually got a golden cross for Caterpillar. We are getting earnings reported this week. So I do want that. Not all of them are death crosses. So I do want to, it is above supports and stuff like that. But Caterpillar, with what's going on in global markets, the Caterpillar sells a lot of stuff to Asia. I think the markets are completely getting this wrong. Okay, I think this thing here could be devastated this coming week. So, that's what I'm looking at as the forward guidance is probably going to be horrible. I mean, I firmly believe forward guidance for Caterpillar is not going to support price. We have Nordstrom's. It's not. I don't know why that one's showing up. Lowe's. We got the death cross here, guys. Okay, so these are just some of the top Airbnb. We were actually setting up for a golden cross on that, but here in the past couple of days they sold it back down. Um, so we'll keep that in mind. MGE, that's another one of your casinos. I think they're going to be one of the hardest hit with what's going on in the Middle East. So bottom line is, guys, I think we're going to see with this corner, the reality is going to be setting in. What happened to Netflix is it's foretelling the destruction in subscribers and any type of growth metrics going forward in these markets. And to be forecasting losing 2 million subscribers, and they didn't actually specify they were all coming from Russia, but you can infer most of them were coming from Russia. Uh, all these multinational companies that have uh, global exposure, they are on the cusp of having some troubles. I mean, simple things like J&J or General Mills or uh, you know uh, I've been watching one of the main things I was watching last week. I was watching the XME index. I thought it was crazy. This thing just got destroyed. The entire index just got destroyed last week. I think this is a Head and Shoulders, a very strong possibility, a Head and Shoulders pattern where we're going to be coming back down into this prior area here on your XMA. They ran all this up thinking we were going to get all of this business because Russia, the steel industry has been shut down, and they've been cut off in the commodity supply. But it's a two-way street. If you're cutting off one big portion of the global economy, that means you're not buying anything either. So just keep that in mind going forward in your trading. And the things that impacted this, that was Alcoa. Look at Alcoa, just got decimated last week. You had Newmont Mining got decimated last week, and then you had FCX. That's what really destroyed that. In my opinion, XME was one of the worst sectors of all last week. So just keep that in mind. And I don't want to be all bearish. I mean, come the end of the week, going into the U.S. GDP, they might want to hold these markets going into that later on this week. But then the same time frame, we got China GDP coming out for last month, and that's going to give us even a better read of what's going on over into Asia Pacific region. So just heads up on that, guys. So there you go. Pretty much rundown. You can pretty much tell that I'm bearish. And 1 second here, and I will give you one last view here. Okay, my last view here on SPY, I'm using a different study set right here, and it is clear what's happened in the past. We have come down into this white EMA line. That's where they took it down before. So we've either come down into that, or we've come down into, like I said, this is a monthly 20 SMA. So this was actually pretty well here this whole time frame right here, because it's a monthly time frame. So we came into that monthly 20 before, and actually came down to this EMA. Well, now this EMA is right above that monthly 20. So that suggests to me earlier on this week we're probably going to be pooping out, going right into this 415 area for a test going into these major earnings events. So that is my primary thesis, because we have broken some supports here. Qs. So Qs, we are into some supports here. They could hold us here. I don't know. We have looked below before. We are breaking this uptrending trend line early. That was all broken there Friday. Broke it early. I think we could actually be marking new lower lows here, possibly going into these numbers. That's actually going to put us right here into that market maker move low for the week. So I do want to float that idea that we might actually early on this week, at least in the short term, be breaking some critical levels, and then waiting for those numbers to come out. So I do want to float that idea as well. IWM. So IWN is a little bit different. It is kind of leading the pack to the downside. You don't have very far at all to go, and you're right into that support. I mean, we're probably already here in the post market. We're probably already into that 190, 191. Let's go over to the Russell here, ready real quick, and we'll see right here. Yeah, see the Russell already in the pre-market here. We're right on that support line. So we start losing that, it gets ugly real quick. So I do want to point that out. Here in the overnight session, we are at very critical support, with the weekly 200 right down here. I think that is still a possibility that we are going to be coming down to that weekly 200 even this week. So just definitely keep that one on. That's 1785 on the ready. So that's all I got to say. Please like the video if you like it. Please do that. Please retweet my video on Twitter, and please leave some comments below. Yeah, even if you got the bullish basis, I'm happy to hear about that and stuff. We are into blackout period on the Fed, so just keep that in mind. That's why I think yields are going to come off and bonds are going to rally. If the markets are going to come down, then they're probably going to park their money over into bonds here in the short term and drive up the yields, or drive down the yields a little bit going into the early part of this week. So there you go. That's all I got to say. Thanks a lot.